Welcome back. Reliance Industries Q3 numbers are just out. The company's reported a profit of 18,540, and this is ahead of the CNBC TV18 poll, which was expecting a profit number of just sub 18,000 crores. So on the bottom line, there is a beat, and the company's profits have gone up by close to about, I think, a little more than 7% on a year-on-year basis. Revenues for the company have come in at 2.4 lakh crore on a quarter-on-quarter basis, again, ahead of street expectations, with the EBITDA margin coming in at 18.3%, having expanded versus 18.1%. It was expected to be a good quarter, and the company seems to have delivered. Some of the drivers of the strong performance were going to be oil to chemicals, which is recovered after a tough one because Singapore GRMs have recovered in the current quarter, and that would drive higher refining margins. For telecom also, it was expected to be a steady quarter aided by the tariff hikes undertaken by the company, and retail too. I think the festive demand would have aided this time around. So as you can see, it's a good showing from Reliance. On a quarter-on-quarter basis, we were anticipating flat revenues, but revenues have also picked up on a sequential basis. So 2.4 lakh, which compares with 2.32 lakh crore on a quarter-on-quarter basis, and a significant jump in the company's EBITDA this time.
Significant jump in the company's EBITDA, and retail was expected to show some push year on year, but what a phenomenal set of numbers that have come in from Reliance Retail this time around. If you look at the numbers, the reported numbers year on year, the revenues actually crossed 90,000 crores on a quarterly basis for the first time. 90,351 crores is the revenue that the company has reported. But the more important number to watch for the retail business this time around would have been EBITDA, with the company expanding its footprint and now stabilizing as well. Are we seeing operating leverage? Yes, that has come by. Most on the street were working with a number of 6,400 crores on Reliance Retail's quarterly EBITDA. The company has gone ahead and reported 6,840 crores as an EBITDA. What was expected was a quarter-on-quarter growth of 8 to 9%. Instead, the company has reported a quarter-on-quarter growth of 17% on the EBITDA front, 18% on the revenue front. Again, the quarter-on-quarter growth takes into account the seasonality, the festive season, etc. as well. If you look at it year on year as well, the street was expecting some sort of moderation, 1 to 2% sort of revenue growth, and flattish sort of EBITDA at around that 6,400 crore mark as well. Year on year, Reliance Retail has grown 8.8% on revenue and 9.5% on the EBITDA itself, so much above what any analyst on the street was expecting. And remember, retail is the valuation driver of the company. The fact that it's crossed that 90,000 crore mark for the first time this quarter, and 6,840 crores on the EBITDA, which is a record-setting quarter for Reliance Retail. After 3 or 4 quarters of consolidation around that 76,000 crore per quarter sort of run rate coming in for the retail business, a revenue of 90,000, the street would take it with both hands, especially given the underperformance that we've seen in the Reliance stock.
Indeed, even the EBITDA on a quarter-on-quarter basis, I think, has gone up by nearly about 12%, and this is higher than the 7-8% that the street was anticipating. So one of the drivers, as you said, is the retail business, where the growth has come in double digits.
Double digits quarter-on-quarter, high single digits year-on-year, 8.8%, 9%.
Okay, but on a quarter-on-quarter basis, it's
18%.
a double digit.
It's incredibly strong because most on the street were working with a number of 7 to 8 or maybe 8 to 9% at best.
Okay, let's get to the oil to chemicals business. The oil to chemicals business too has seen a recovery in the company's EBITDA. The oil and gas business, though, has seen a little bit of a sequential drop on account of lower production. So if you look at the oil to chemicals EBITDA, it's come in at 14,400, which compares with about 14,000. Because there is a jump in the company's top line, the margins are lower, but the EBITDA for oil to chemicals has picked up, so that's a strong showing. Though the oil and gas, which is basically your upstream business, that has seen some pressure at the EBITDA level. So pretty much on expected lines, but slightly higher than what the street was anticipating. If we have any reactions, let's quickly. Okay, we'll get to that in just a minute. Awaiting the Jio numbers too, and for Jio also, it's expected to be a strong quarter, aided by the tariff hike that the company undertook in July. So the benefit of the tariff hike played out in Q2, in July, August, and September. But this would be the second consecutive quarter because generally the tariff hike flows through, pass-through takes place over 2 to 3 quarters because some people may have opted for a 3-month pack. Some people may have opted for a 6-month pack in terms of prepaid pack. So therefore, even for Reliance Jio, it's expected to be a strong quarter, with ARPUs likely to go up above the 200 rupee mark versus 195 that they had in the prior quarter. But for Reliance Jio, the key to track would be the subscriber numbers, because subscribers for the company had come down in the prior quarter due to the tariff hike. So, and it had fallen by more than 10 million, and that was a bit disappointing. So if I think the street will closely track. These are the only numbers that we have so far, and it's a good showing. The company's performance has beaten street expectation. Oil to chemicals has been strong, retail even stronger compared to street expectations, and the oil and gas, i.e. the upstream business, is under pressure. Jio numbers yet are still not out.
Jio numbers still not out. We still have, still awaiting the press commentary coming in from the company when it comes to the reported numbers, and some internal details coming in from the Reliance Jio business itself, along with Reliance Retail. But there has been a resilient O2C performance led by strong domestic demand, higher volumes, and operational flexibility as well. A healthy growth of 9% year on year in Reliance Retail is something that the street will take note of. An ARPU of closer to 200, over 200 is what the street is anticipating this time as well. Sunny Agarwal of SBI Securities joins in now. Nitin Soni of Fitch Ratings is with us as well. Though we'll go to Nitin once we have more details on Jio itself. But Sunny, coming to you, these numbers, whichever way you cut it, looks a lot better than what the street was anticipating, led by the retail business, which is again the valuation driver for the company this time around. The fact that the stock has seen a big correction, or so to say underperformance from the highs, do you think this would call for a big re-rating event for Reliance? How would you read these numbers, and what does it do to the stock?
Good evening. I think yes, definitely beat on the retail business front, and clearly that is going to be the revenue, valuation re-rating driver. The reason being that this year we are expecting that consumer-facing business will start contributing close to 50% of the operating profit. And over the next 2 years, the contribution from the retail business or consumer business will scale up to 65 to 70% at EBIT level. So definitely that is one of the parameters that will drive the re-rating as far as Reliance is concerned. And I think looking prima facie at details which are available, I think a very strong set of numbers as far as retail business is concerned. Telecom is something again which I would like to track again on ARPU side, and what has been the consolidation post the tariff hike as far as subscriber addition is concerned. So ARPU I am expecting close to 203 to 5 level. In case that number is met, I think again it will be a big thumbs up from the street as far as Reliance.
Take that point. Since we are speaking about Reliance Retail itself, we have Karan Taurani joining in. Karan, do you have any expectations on the retail business? Most on the street were not expecting more than 1 to 2% sort of year-on-year growth, and even on the EBITDA front, no more than 2 to 3% at best. The company has gone ahead and surprised positively with an 8.8% growth year-on-year, 18% growth obviously led by seasonality quarter-on-quarter, and a strong operational performance as well. What do you make of this number? 90,000 crores on a quarterly run rate when it comes to retail business itself, at a time when consumer sentiment was expected to be subdued and not much big pickup was seen here. What do you make of these numbers?
I think the numbers are not that great or good, rather I would say, in terms of performance. I think the growth for Reliance has been converging as far as retail is concerned. They have taken steps to kind of rationalize the store count, to kind of go slow on expansion because the demand environment has been soft for the entire retail category. I think online would have definitely added some kind of fillip or positive element, in terms of this growth. But net-net, I think, going ahead as well, the demand environment signals remain to be mixed. And I think maybe 2 or 3 more quarters, unless we see this strong double-digit growth in the retail segment coming back as compared to the earlier years that Reliance Retail has supported.
Let's get to Reliance Jio then. Numbers are out. The company's revenue growth has come in at 3.4% quarter-on-quarter and 15.5% on a year-on-year basis. So compared to last quarter, 7% growth sequentially, growth rate has come down to 3.4%, but it's still a healthy growth rate. Margins are largely steady at 52.8%. The CNBC TV18 poll threw up a bit of a margin expansion, but that's not played out for Reliance Jio. And ARPU, the average revenue per user, has gone up from 195 to 203.3, which marks about a 11% jump in the company's ARPUs on a sequential basis. So ARPUs are in line, quite strong. And that's a good showing, but margins are slightly lower than what the street was anticipating. But all in all, it's a steady quarter. It's not that it's a big beat, but it's a steady performance this time, aided by the tariff hikes, the second consecutive quarter of tariff hike benefits. Prakash is still with us. Prakash, come in on Reliance Jio.
So I think, Rima, these are very impressive numbers, given the kind of struggle that the company has been facing in terms of being able to, increase its ARPU. Forget about the margin. The margin expansion would probably happen with a lag. But I think the ARPU increase to 203 plus is definitely very positive. It also kind of helps them get into a little bit of SIM rationalization at some point in time during 2025 to make sure that whatever incrementally they are getting from on the ARPU side also kind of translates into efficiencies on the subscriber base that they've built. So all in all, quite positive. It might not optically sound like a very big beat, but my sense is the fact that they're growing in a challenging environment itself is positive.
Okay, one number in the Jio's in the Jio internals, which is good, is subscribers. So subscribers have gone up by 3.3 million on a quarter-on-quarter basis. Remember, in the prior quarter, the subscriber base shrunk by 10.9 million. The street was concerned with the subscriber numbers, but this quarter, there is an addition of 3.3 million. We've got Balaji as well joining in from IFL. He tracks the telecom sector very, very closely, and Jio in particular. Balaji, your first thoughts?
I would think that so the subscriber count increase during the quarter is along expected lines because even though we did see some losses in October, our channel check suggested that the subscriber losses largely reversed in November and December, and the reported numbers of Jio kind of bear testament to that. And the ARPU is also almost bang in line. While the EBITDA growth is a little lower than expected, one can't, rule out factors like FX losses, etc., which might have had played a role in that, because we did see some rupee depreciation towards the end of the quarter, which has accelerated during January. But keeping that aside, there could be some factors like these which may have, had a little bit of an adverse impact on the EBITDA margins. But all in all, I would say these are in-line numbers.
All right, you say these are inline numbers with, on the Jio front. Well, let's get in some more numbers coming in. Also, we're awaiting some, details coming in from Reliance on the retail platform, the internals of the oil to chemicals business, and others as well, as we are awaiting the press release. Let's go across to Nitin Soni once as well. Nitin, the street was anticipating 203 to 205 rupees in terms of an average revenue per user on the Jio business of the price hikes that were taken. What do you make of the numbers that have come by on all parameters?
Yeah, thanks for having me on the show. So I think I agree with the other speakers. I think these are very impressive numbers given the challenging environment the industry is facing. If you first look at the telecom business, I think it's a very steady quarter. The subscribers have grown by 3 million. And so they have reversed the trend of losing subscribers, what we have seen in the last few quarters. And with the help of the tariff hikes, the average revenue per user has increased to 203. And we do expect, the average revenue per user to climb up by 10 to 15% in the next 12 months as they get more 5G subscribers and people start using more data. So the data consumption story is still there. It's pretty robust, and the data consumption will continue to grow. And one notable thing will happen with the telecom business is now the peak capex is gone. So they have done a large part of the 5G, and the peak capex in the telecom business is over and done with. And the telecom business will start generating a lot of positive free cash flow. Same with the retail business. I think retail business has also performed really well. 15% growth in a challenging environment compared to the other peers. So both retail and telecom, which will start contributing like 55 to 70% of EBITDA in the next 12 to 24 months, will contribute a lot of positive free cash flow generation, which will help them to fund the new capex cycle which Reliance will have on the renewable side.
All right, we take that point. Now we do have the press release with us, Reliance Retail. On that, they say that it delivered a strong performance, noteworthy contribution coming in from all formats. The business ably capitalized on the pickup in consumption amid the festive demand during the quarter. Superior understanding of customer needs and preferences enabled the company to do extremely well. Some more details that have come by: footfall of 296 million across formats, with 779 new stores opened. Gross revenue was close to 90,333 crores, with revenue from operations coming in closer to that 79,595 odd crores itself. And some more details that we have: the registered customer base for Reliance Retail grew to about 338 million, and the total store count now stands at 19,102. Digital now contributes about 18% to the overall revenues of the company, and we did see good retail volume, etc., coming by amid the festive season. So Reliance Retail doing extremely well. And if you look at all the other segments as well, O2C, for instance, quarterly EBITDA at nearly 14,400 crore, 1,50,000 crore on the top line. The company said that the revenue growth was supported by robust domestic demand and product placement. Domestic fuel retailing volume increased by around 43.7% in market share and 22.8% in HSD as well. So all of them doing well.
Indeed, the oil to chemical business that we were discussing, on a quarter-on-quarter basis, the oil to chemical business EBIT has actually gone up by nearly 16%. And that's a big positive. So the recovery in the oil to chemical business has also been a big driver of the sequential increase that we're seeing in Reliance's numbers and the beat this time, because it's come in higher. Our poll threw up a growth of about 10%, but the actual, sequentially, but the growth has been at 16%. So oil to chemicals recovery has been better. Retail, as you say, has been better. Telecom has been steady. There is no outperformance. And on expected lines, the upstream business has been a bit muted on account of lower production and volumes.
Take that point, Prakash. This is coming on the performance, but alongside that, the stock as well. We were looking at, underperforming stocks. It's rare that Reliance, underperforms for such a long period. And typically when they do, the next year underperforming stocks, they start to outperform as well. If you're looking at stocks on the Nifty which underperformed, and if you compare that to, say, the average analyst target price on the stock for the next 12 months, the highest upside seems like it would be for Reliance, with a near 43% gap between the average analyst target price on Reliance versus what the stock is trading at right now. The average analyst target price on Reliance is closer to 1,1800 odd rupees, and that compares with the stock 52-week high of 1,600 rupees. Currently the stock at closer to 1,250, 1,270 rupees. This gap between the analyst target versus the stock's own performance, and then club that with good performance coming in the third quarter. How do you view this?
No, I think these numbers very clearly give the confidence that this gap, which has been unduly extended, and I'll come to why it has been extended. There are many reasons for this gap to start reducing. Now, whether that happens in a linear, gradual way, whether it needs a little bit of other triggers to make that happen. One trigger could be some sort of a development on the Jio IPO timelines. If that comes out and people start figuring out that there's so much of value that will get unlocked, then the gigafactory, the new energy complex, that's something which is bound to get the market excited, because it will start giving you visibility on what kind of earnings growth you can expect over the next 2-3 years, and that will start getting penciled in. So there are some triggers which could help accelerate the move for the stock to fill this gap. But the reason why the gap happened in the first place, Mangalam, and that's the interesting part, is because last 3 months you've seen a very high level of exit from ETFs in India. And the ETF exits do not really care in terms of where they're getting out of it fundamentally. And Reliance had a significant money allocated to itself, into the stock had that, and that's probably gone out. And when it has gone out, it's probably damaged the price volume behaviors to some extent. But most upgrades that you hear about talk about very organic growth in the business, and these kind of numbers I don't think will be very easy to ignore for people who are looking at the value in terms of the next 2-3 years. And remember, the 24 AGM, Mr. Ambani himself talked about Reliance doubling itself in terms of a lot of the metrics, headline metrics in the next 4 years. So if that is something which you are very clear about, there's no reason why the stock will not participate. So it's just a matter of time. And I said it could be triggers that could come from anywhere, and they could be around the corner.
Nitin, the street is hopeful that we will get a Jio IPO this time. Given the numbers, the performance so far, do you think we are ready for an IPO from the telecom business?
Yeah, so see, telecom business for Reliance has come a long way. I mean, they have gained a significant number of subscribers. They are the market leaders. And now, if you look at the way Reliance is running its telecom business, they are completely focusing on profitability and adding only profitable subscribers. So that's why you saw that in the last few quarters, they have churned away some of the low-paying subscribers, and that's the reason they lost few subscribers in the last few quarters. But I think it is, I mean, it's tough for me to say what is the right time, and we can't really comment on the equity side of the things. But we understand that they have certain commitments with the investors at the Jio platform level, that they have to do the Jio's initial public offer at some point of time, right? So they have to provide an exit to those investors. So yes, I mean, at some point of time they will come out with the dilution of equity in the whether it's a Reliance or the Jio platform business. So, but it's now an adult. It's a very mature telecom business. The industry has, corrected to a duopoly structure. Vodafone is completely behind the curve in terms of 5G investments. A very limited risk involved in terms of telecom business. Average revenue per user has a long leg of growth from here on as the data consumption grows. So yeah, I mean, it's a mature adult business with going to generate a lot of positive free cash flow generation.
Sunny, comment on the oil and gas business. O2C has been strong, ahead of street expectation. But what about the oil and gas business? The EBITDA has come in at about 5,565 crore, which is an increase of 5% sequentially, but a decline of 4% on a year-on-year basis on account of lower volumes. Are these numbers in line with your expectations, or is there a beat or a miss here?
I think pretty much in line set of number as far as oil and gas sector is concerned. I think, again, if you look at on a Q-on-Q basis, I think the total throughput has been flat. Throughput has been flat at 20.2 million ton, and production for sale has been close to 17.9 million ton. Again, kind of flattish number. So I think in line on with expectation number as far as oil and gas is concerned.
All right, so more details in terms of consumer brands, and this is something that the street would have really looked forward to. Some data coming in. Grocery business actually grew about 37% year on year. That's strong growth that the company has reported. Importantly, if you look at Campa, which was supposed to be a strong competitor to the likes of Coke, Pepsi, and a lot of the products coming in from the house of Tata Global Beverages back in the day, and now Tata Consumer Products as well. Campa actually has now 10% market share in some of their states. And both the Reliance FMCG business, Independence, and Campa, the company says, are projected to cross 1,000 crore turnover each in FY25. The other data point that I'm looking at is in terms of revenue per square feet increase, quarter on quarter, that number has grown by 21%. Whereas the expectation from Nuvama was a 7% increase. So it's a 3 times faster growth than what the street was anticipating this time around. And the new format is doing extremely well as well.
Okay, that's some more details. It's incredible how quickly Campa has dislodged many of the larger players and how fast Campa is growing. So it's really disrupted that space, which we thought was, a fairly stable market and a fairly stable duopoly between at least the large players.
When you speak to a lot of the larger e-commerce players or Q-commerce players, etc., they speak about $1 million revenues, $1 billion revenues, touching all those gross order volumes, etc. Just to put things into perspective, Reliance Retail's quarterly, revenue run rate is 90,351 crores. 18% of that is captured from their new commerce business, which is digital commerce and new commerce. 18% of 90,350 crores is closer to 16,250 crores, so roughly $2 billion. So what companies are doing on an annual basis, and speaking about how big they've become in the street, ascribes that sort of valuation to them as well, saying that they're doing extremely well in the new commerce business. Reliance actually slowly and steadily in the new commerce and digital business itself has crossed the $2 billion mark on a revenue front in just one quarter. So that's some growth that we're seeing, typically a smaller part of their overall business, but that overall business itself is so large that a small part of that is much larger than a lot of the specialists in that space itself. Prakash, come in on this one. Reliance Digital Commerce and New Commerce, which at 18% of the overall retail business is $2 billion per quarter in terms of revenue.
No, absolutely. So, Bangam, what happens is when we evaluate the Reliance retail business, we keep comparing it with the existing players and some of the larger chains. But remember, the scale at which Reliance Retail is operating now is unmatched. So what's going to happen is the numbers will also astound us as they kind of start coming of age. And while this has happened in a festive season of sorts, this is more grocery led, more digital, this thing commerce led. You can imagine when the other brand plays that they've been building up, the Swadesh and the Yustras of the world, that starts kind of revving up. And it's a juggernaut that you can't stop. It's growing at a pace that is so rapid in terms of new addition of stores, the kind of footfall that they're able to. And the best part is they've also thought of rationalizing a lot of the store count. So it's not that, money is being spent, they're getting more and more efficient with this thing. I haven't seen in the last 7-8 quarters the EBITDA margins actually going anywhere beyond this 7.3 to 7.6% mark. So that band is so tight, they've not lost any opportunity to, manage to come up with these margins, even when the scale up is happening. So that's the remarkable part. I would believe retail is turning out to be the jewel in the crown in that sense for the timing for the company as a whole. And Geo throwing up cash. There's not much of capex. Retail revving up so fast, and of course the O2C business being where it is, it's always been a cash cow. So that's where analysts will start taking notice of what to pencil in terms of earnings forecast now. And from that perspective, it'll be interesting to see how the market reacts to this tomorrow onwards.
Just one more data point. I was looking at Instamart's GOV for the second quarter, Swiggy Instamart. It's close to around 3,300 crores. And this is gross order value that I'm talking about, not even revenue, which is a lot lower than that. Blinkit, which is the largest player there, has done close to around 6,000 odd crores, if I remember correctly, in the second quarter when it comes to the GOV. And you look at Reliance in just one quarter. This is not, so Blinkit's GOV for the second quarter is 6,132 odd crores. Club both of them, it's close to 9,000 crores. That's the gross order value. For Reliance's digital business, in one quarter itself, the revenue is double of that at 16,000 odd crores. So definitely, as Prakash is talking about, a big jewel in the crown of the overall Reliance business itself, a big valuation driver as well. At last fundraise, it was valued at close to around $100 billion. Final thoughts before we wrap this up. Sunny, your thoughts on the stock, your target, and what happens tomorrow?
Yeah, I think a positive reaction. I believe the fair value of the company is close to 1650, 700 rupees. 1700 rupees, pardon me, 1650 to 1700 rupees. And I think tomorrow we may see a positive reaction on the Reliance stock.
Nitin, you want to comment on this? Nitin?
I think we've lost Nitin, but just a quick recap then. Reliance Industries Q3 numbers have come in ahead of street expectations. The company has reported a revenue growth of 6.6% year-on-year, margins at 18.3%, and a profit growth of close to about 7.4%. This is ahead of expectations, and the beat this time is driven by the O2C, oil to chemicals, and the retail business, while telecom and oil and gas has been largely in line. We thank our guests for joining us, this Thursday night. But stay tuned for CNBC TV 18 for more news and updates on the other side.